Getty Images. The Federal Reserve's Policy Committee is meeting Tuesday and Wednesday. But let's not talk about that. Instead, let's jump ahead to the December meeting where there is still a chance, albeit a small one, that interest rates won't go up. As of last Friday, Wall Street thinks there was a 72.3% probability of a 25 basis point, 0.25% rate hike when the Fed's Open Market Committee meets on deck. 18 to 19, and a 3.6% chance of a 50 basis point, 0.5% hike. That leaves a 24.1% chance there will be no December increase. Up until recent strong economic reports, the feeling has been that there was a 50-50 chance of a December rate hike. But with economic data showing vigor, and the Fed honed in on inflation, given how much our deficit-addicted government spends, those odds have gone up in recent weeks. A hike in rates at this week's meeting is basically a foregone conclusion, the market thinks. Odds makers on Wall Street say there's a 97.9% chance of a 25 basis point hike this week and a 2% chance of a 50 basis point increase. You can fit the no-rate hike crowd in the backseat of a Prius. The Fed last hiked rates in June, to between 1.75 and 2%, the most recent in a series of 7 hikes that began in 2015. Unless something extraordinary happens at the Fed meeting this week, the new rate should be set at 2.0 to 2.25%. The Fed should also give its typical assessment of the economy in the post-meeting summary: growth strong, job market tightening, and inflation still nothing to get worried about. The Fed doesn't set rates for the financial markets, but its actions influence them. The U.S. government's 10-year note is now solidly over 3%, which is their highest level since May, and it seems to be staying there. Pretty soon you'll be hearing talk about the possibility of 4% rates on the 10-year, especially if the Fed this week is more optimistic about the economy than expected. And while the guessing is that the Fed will soon slow down its rate increases, the experts still think that 2 more hikes will come in 2019. Where can there be surprises? If the Fed wants to get the financial market's attention, Chairman Jerome Powell could raise rates by 50 basis points on 1 or more occasions. Powell might also decide to raise rates in between its normal meetings. There's no rule that says the Fed can't, and it has done that before. Another surprise could come from the stock market, which is percolating again into dangerous territory. Typically investors don't fight the Fed, meaning, you don't drive stock prices to new records when interest rates are being raised. Those higher rates eventually compete against stocks because the yields people get on government securities come with no risk. Till Monday, stocks were strangely ignoring the ongoing chaos in Washington and, probably most important, the trade war between the U.S. and China. News that China broke off negotiations over this past weekend could further rile stocks. The Dow Jones Industrial Average did slip on Monday, falling 181.45 points, to 26,562.05. Wall Street rallied nicely last week, and those gains in stocks were attributed by some media pundits to an easing of the trade wars. Nonsense. Who makes up this crap? Tensions with China over trade couldn't be worse right now, and they were just as bad last week. Stocks went up because it was one of those notorious options expiration weeks when traders typically push stock prices and equity futures prices up because they want to roll their portfolios over into the new month. In other words, the last week's action was a technical rally. Technical rallies are often wiped out when fundamentals, like the trade tension and the Fed's actions, become overwhelming. Be careful.